That's right. But I think the division when it comes to these forecasts is between the overall FOMC and the voting members. There are 17 members overall. There are 10 who get to vote. And those who don't get to vote are all Fed bank presidents who are a little bit more hawkish. So what we think is the case is that actually the 10 voting members are in favor of cutting one or maybe two more times this year. But the overall committee is not. I wish they were listening to the overall committee. But at the moment, I do think they see it as a mid-cycle adjustment, but they've got to at some stage say it. They've got to say, this is the last cookie we're giving you here, and we really mean it this time. Because every time they cut and then they don't say, they leave it uncertain. Well, uncertainty out there, people are going to price in another rate cut, and then they're going to be the same position.
They're going to be disappointed.
Exactly.
When and if it doesn't
What we're missing there is what I'd love to have seen is we will be patient about further rate cuts. That would have taken October off the table, left December as a possibility, but at least said
you're probably
we're almost
the only one
done.
in the market who really wants that. Everybody else wants it to go the other way. I mean, last time they said mid-cycle adjustment, and then they cut rates again.
Well, I think the chart that you just had up on screen, the dollar index, tells the story. The market's disappointed. The dollar strengthened, and the way I look at the Fed right now is that they're successful if they can get the dollar a little bit weaker and if they can get the curve a little bit steeper. The dollar index has just spiked right now. Now, whenever you get a strong dollar, again, I look at things from a global perspective. I understand the domestic argument. Equities are doing fine. Credit spreads are narrow. I get it. But when you add in global factors, when you look at the trade war between the U.S. and China, things that are going on, with oil and all these other factors, I just don't see that we're paying very, very much for insurance if we, in fact...
That would tell me, though, that the Fed doesn't really have much control over the dollar. I mean, because of these global forces, it doesn't matter how many times. We've been in a rate cutting. We've had two cuts, right? And the dollar has done what? Gone higher.
So the Fed's dual mandate is not the dollar in the yield curve, right? So we get that, and we understand those are the key points. But whenever the Fed adjusts policy, they typically look at it through the lens of financial conditions. Now, financial conditions are typically from domestic factors. What I'm saying is that the Fed is starting to think about looking outside globally, but that is not within their policy reaction function. So they have a very hard time saying, hey, there are these other global factors out there that are a problem, and that's why we're actually cutting rates.
So for viewers or for anchors who may not understand why the dollar would spike like that based on what the Fed just did.
Right.
What is the explanation? What is the connection? That the Fed has made it clear that we are not going to chase European rates, global rates down, so our money becomes...
That's exactly it. That's exactly it. It's all about interest rate differentials, right? So what I said earlier was that the ECB, whenever we look at interest rates and comparisons for currencies, it's all about interest rate differentials. The ECB is very unified. The Fed is very, very divided. The ECB is very willing to cut interest rates and do QE and expand their balance sheet. The Fed is still dithering over a 25 basis point cut and whether or not the Phillips curve still works. And what the markets are saying.
Anyone looks to Europe and says, "Wow, what a smashing success!"
No, absolutely not.
Even if they're unanimous on it.
But the dollar is, and that's the key point. The dollar is getting stronger because the ECB.
But they're all implementing basically an ineffective monetary policy in order to play this currency war. And what obviously the optimal solution is to have a little bit of intergovernmental conversation about this. Look, let's not try to play this currency war. Let's try and set interest rates at an appropriate level for our economies in the long run. I think that would be obviously be a better solution.
I also think a stronger dollar is somewhat inevitable because the U.S. has become a flight to safety asset class. We're best on the block in a pretty poor block right now. We're growing at a decent pace, to David's point. Europe, China, not so much. So I still think treasuries, dollar, gold, you're going to see that trade continue for some time because of this.
Steve?
Yeah, real quickly. This is an early look. So it's like looking at a painted room before it's quite ready, but an early look at the October Fed funds futures market. And I don't know if you're going to bring Rick in. He can give you a little bit later. Look, I'll tell you what it is right now. It's just a 42% chance of a rate cut in October. And then moving on, it's about, well, it looks like there's a 60% chance. So the market has still dialed in another rate cut by December, which I think getting to what David Kelly was talking about, this idea that who the seven are that are banking on that next cut matter a lot, and it's probably members of the Board of Governors rather than the presidents. The hawks do come from the presidential ranks. There's at least 5 of them. So I'm not sure what we're looking at. Oh, there's the forecast that just came up. That's the Fed's forecast. But again, this differs from the market, which pretty much has one more built in, but it looks like there's a pause being contemplated, more likely than not for October, rather than this rate cut now seen in December?
I'm on the president's Twitter page just waiting. Waiting. Maybe he'll wait for the press conference. We'll see how that goes, see how the market reacts. But this is somebody who cares deeply about the strong dollar that you've just explained, Mona, has no reason to weaken from here.
Yeah, if President Trump blames the Fed for that, it's probably illogical reasoning at this point. But I do think we'll probably hear from President Trump saying again, he wants more. And that reasoning is obviously a weaker dollar would help our exporters, would somewhat help our economy.
How do we get a weaker dollar?
I think at this point we're growing at 2%, perhaps even more than 2% in one of these quarters. I don't think we need a weaker dollar. It looks like our exporters are actually doing fine. The rest of the world with a weaker currency, like we talked about, with low rates, with negative rates, can't seem to catch a break.